And stocks are moving higher today thanks to a rise in Apple shares as investors look ahead to a possible end of the ongoing U.S. government shutdown, as well as a slew of big name earnings reports. Also, the inflation data is expected in the coming days. So there is a lot going on. Let's bring in Keith Buchanan, Senior Portfolio Manager at Globalt Investments. And Keith, thanks very much for joining us.
Thanks for having me.
The roller coaster, it's an overall good roller coaster. It seems to be going up still, but another up day today compared to what we saw last week, which was up, down, and update today. Any reasons that are driving it right now? What are the main reasons?
Right, and thanks again for having me. We're looking at this as somewhat of a relief rally, as we have a confluence of risks really coming together right now in this moment, with geopolitical risks, of course, political risks coming from here in the U.S. Capitol Hill with the current shutdown and the ripple effects from that, as well as the ongoing debate about monetary policy and how that impacts our markets going forward, and valuations being relatively high from a historical standpoint. So all these factors are coming into play right now as earnings season is either confirming or denying a lot of those different risks that are kind of, again, colliding at this moment.
And now, this is a big week for earnings. For the most part, they've been mostly positive. What are you looking for this week?
Right. Looking back to last quarter, we were in the same position, and at least a similar position, in understanding the swirl of risks that earnings season had to either dispel or confirm that there were real problems in our macroeconomic environment. Last earnings cycle, the earnings forecast and the earnings for the previous quarter confirmed a lot of strength that we saw bubbling up within the macroeconomic environment, despite the risk that we saw as very apparent. Fast forward this quarter, I think the market is begging for the same similar performance. Thus far, this earnings season has confirmed a lot of strength as well as it did in the previous quarter, but we still have a lot to go. And we have some big tech names this week that should hopefully confirm the direction that the market is moving in from a investment spending standpoint, with AI growth, as well as just expectations meeting or exceeding where we've been over the past quarter.
And what might be some alarm bells for you for some of these earnings?
Coming out of last week, we saw some credit risk start to bubble up that caused, again, just larger macroeconomic growth concerns that we feel like were more idiosyncratic and isolated to those few banks. We're also looking at, Intel with its government collaboration, how that pans out as far as the investor interest from a private standpoint remaining high within that stock, but also looking at Tesla, which is a little more consumer driven, and also understanding from an auto standpoint and also from a broader economic tech spending standpoint, where that story tends to trend as well going into next quarter. So a lot of different factors at play over the next week or so that should give us a glimpse into the window of how corporate America is handling this evolving environment.
And of course, the focus is on AI and tech. Are there other areas that people should be paying attention to when they see their earnings?
Sure, we're focused on not only that part of the market, which is from a market cap standpoint unavoidable, but also we're looking at how the consumer is dealing with this environment. We look back at Delta Airlines, the name that we have within our client strategies, and looking at how the bifurcation of the consumer is driving a change in spending that will benefit certain corporations over others. So we're maintaining a lot of focus on just how the consumer environment, being as 2/3 of our economy, is changing from the pandemic to post-pandemic, but now more of a steady state of spending patterns that we feel like are changing in a way that the market is just starting to accept and appreciate and wrap its arms around. So we're focused on the consumer environment as well.
And any concerns about the inflation data that's coming out that it's expected it will likely be a little higher than what people thought it might be? And what does that mean when it comes to the Fed?
Right. There's laser focus on the consumer inflation data is coming out on Friday, slated for Friday right now, because it's been just a dearth of economic data, particularly from the jobs market. But now we have inflation data we have to juxtapose against a lack of labor employment data that typically comes from the government that we just haven't seen since the shutdown began. So there's there's going to be laser focus and perhaps even some volatility around some of the nuances in this report that we're looking at perhaps confirming hopefully a downward trend in inflation that can hopefully justify the 2 cuts that are priced into the market for this month and also in December, as well as 2 more cuts next year, or perhaps even more cuts next year if the inflation report is more satisfactory in having lower than expected inflation pressure. So there's a lot really riding on this report, not only because it's important in and of itself, but also because there has been again, delays and postponement of other reports because of the shutdown. So it's a lot of focus on this report coming up on Friday.
Okay, and let's talk a little bit. We're almost out of time, but 2 stocks you like. We'll start off with Delta Airlines.
Sure. We hit on Delta earlier. We had earnings a couple of weeks ago, really confirmed the pocket of dislocation between supply and demand here domestically over the summer is somewhat behind them, and earnings growth that could continue to move higher. Something that the valuation in the stock doesn't appreciate just yet. Also, Bank of America is a name that we've owned within the banking space. We also feel like the expense management there can help to wring out a lot of profits that the market isn't appreciating. You get a lot of the consumer environment and also not having to pay a super premium like you do in other big bank names, some of which we own, some of which we don't. But Bank of America is one that we're focused on right now.
Okay, Keith, thank you very much for joining us today. Appreciate it.
Thank you.
Keith Buchanan is a senior portfolio manager at Globalt Investments.